Welcome back. Right now, the clock is ticking to file your taxes. The deadline is tomorrow. But with tax day fast approaching, some of you might still have questions about rule changes when it comes to paying taxes on unemployment. So we called on tax expert Doug Preble, the GM of Jackson Hewitt, here in Orlando to help sort out the confusion.
So typically, you have to claim any income you had, whether it was earned or unearned. And unemployment is considered unearned income and is generally taxable on your taxes every single year, except for 2020 because of the COVID pandemic. They said that's not going to be taxable. The challenge for everybody is Congress made this decision in March. So people that filed in January and February and claimed it as taxable income had already filed their tax returns. So what are those people supposed to do? Well, the IRS has said they're going to fix all those tax returns that people already filed in January and February. So they do not, I emphasize, do not want you to amend the tax return at this point. They will fix anything that was on the return relative to unemployment.
So if you filed your taxes before March 11th, the IRS will amend your return to reflect the change for any taxes paid on unemployment up to $10,200. Right now, about a third of Americans are working on getting their taxes done in time. Doug offers these last-minute tax tips for those scrambling to get everything finished.
Well, there's a number of them. I would probably point out the fact that you can actually claim $300 worth of cash contributions to charities this year without itemizing. The standard deduction went up considerably this last year, so a lot of people forget that they can claim those charitable contributions even if they're not itemizing. So that's something we want to make sure people don't forget. If you're self-employed in any manner whatsoever, there's a Form 7207. So if the COVID impacted your business and you were not able to do anything for a week or two, you can claim a credit on your Schedule C, which is your self-employment, on your Form 1040. You can actually still do things today that are going to impact your 2020 tax return. You can still contribute to an IRA and take the tax deduction for that contribution into a retirement account, and that can reduce your taxable income. And there's also a new form, fairly new form that people are not familiar with called the Savers Credit. So if you're married filing jointly and you're making less than, say, $64,000, Uncle Sam will actually give you a tax credit if you're saving for your retirement. So not only can you reduce your income at this point, you can also get another additional credit as well.
The maximum Savers credit is $1,000 or $2,000 if you're filing jointly. There are certain restrictions, so for more info on the Savers credit, you can go to our website, fox35orlando.com, where you can find a link to the IRS chart for 2020. Time now to turn our attention to some different numbers, our daytime highs. Leslie joining us now with some cooler temperatures to start our day. Leslie?